ICICI Lombard and cnbc TV 18 present India Risk Management Awards Risk Masterclass.
I'm delighted to welcome you to the Risk Masterclass, an exclusive initiative under the aegis of India Risk Management Awards, brought to you by ICICI Lombard General Insurance Limited and cnbc TV 18. Today's masterclass, we are here to explore ways in which both manufacturing and service sectors, they can sort of adapt a rigorous approach to foresight and, of course, preparedness for these near-term shocks. And simultaneously, the aim is to bolster resilience to longer-term risk and chart a path forward to a more prosperous world. So again, thank you, ladies and gentlemen, for being here. Let's start the proceedings of the evening. Can I invite on stage Sahil Kangotra, head of the Corporate Solutions Group, West and East of ICICI Lombard General Insurance Company, to set the tone for the evening and provide us with the overview, of course, of strategies to adapt to a rapidly evolving world. Sahil, if you can join us on stage and start the evening.
As the saying goes, if you don't invest in risk, it does not matter which business you are in, it's a risky business. At ICICI Lombard, we believe that the role of the general insurance company has evolved in last few years. We are no longer limited as a efficient claim settlement partner alone, but have also expanded and positioned ourselves as a risk solution provider. We work with you to identify your risk proactively and simultaneously try to find solution to mitigate those risks or losses. Our value-add services across product lines, be it be fire, marine, cyberwares, health, has been really appreciated by our customers. I'm happy to share that we are industry pioneer in launching IoT-based fire hydrant system. We are proud that we have patented that particular product. On the health side, along with our application, we provide a lot of wellness solution wherein 24/7 doctor on call is available. We provide 24/7 ambulance services and host of other features. We have worked with many large organizations to promote preventive healthcare, which leads to reduced period of hospitalization and improved physical health and well-being of our customers. These solutions have helped clients reduce their claims. In the recent past, we have witnessed new risks emerging, which have seriously impacted every nation globally. Traditional risks were more physical in nature, confined to a particular area, factory, location, maybe on transportation from one point to another, at max act of God. But the new risks are disrupting the entire globe. From the pandemic to the devastating war between Russia and Ukraine, geopolitical situation across the world, definition of risk is really changing. I think the good news is that Indian economy is showing a massive growth and is poised to become a USD 5 trillion economy by 2026. We witnessed a lot of effort by government, the private sector companies to boost the economy. With these challenging and conflicting, yet hopeful and bright times ahead, let's hear from our industry experts about their views. Let's open today's discussion and welcome our eminent speakers from diverse industries. I am positive we all will learn a lot from their experiences in managing their companies and risk associated with their businesses. Thank you all for joining us today. Thank you.
So thank you for your insights, Sahil. To continue with tonight's proceedings, I'd like to extend an invitation to Mr. Rajendra Chunotkar, President of Manufacturing Operations at Lupin Limited, to share his first-hand experience of embracing change during challenging times. Mr. Chunotkar, if I can invite you on stage to deliver your keynote address.
I am here, to talk about Indian pharma industry, the risk, the challenges, and how we are going to, manage this risk. Indian pharma industry, I will like to give you some background, because if you look at in last 5 years, we had a CAGR almost 6%. The revenues from the Indian pharma industry going from 31.5 billion to 41.5 billion. And in the next few years, we are looking at a CAGR of 10 to 12%. And by 2030, we see that the Indian pharma industry will go to almost $130 billion. What are the different risks what we have in Indian pharma industry? We have the price erosion because of the consolidation of the customers. We have lesser products going off patent. We have the increasing regulatory issues. There have been challenges from the small players. Availability of talent, the attrition what we are facing in the pharma industry, the increase in the input cost of materials, the freight cost increases, delays in the availability of the electronic component. So how we have been able to deal with all these challenges, especially on the margin front? How do we improve our cost? How do we improve our agility for the supply? That's what few of the points I have listed here. We work on the vendor development, the alternate vendor development, considering China threats. Many of the key sourcing materials manufacturing has started in India, and there is, as a regulatory challenge is always there. Whenever you are changing your source of supply, you have to take the plant scale batches, you have to look at the stability then you have to apply to the regulatory authority. That itself is 1.5 year program. So you have to go through these programs and look for the cost reduction as well as the availability. Apart from that, we talked about the utility rates. So what we are doing is using the alternate fuels, whether it's briquette in terms of boiler or whether it is solar energy or the wind energy for the power supply. That's what we have been pursuing. We also started manufacturing some of the key sourcing raw materials ourselves, to come out of the China factor. So these are all the activities, which we have been doing in Lupin to have these challenges negated. So that's where I will like to stop here, and thank you very much. So the important thing is always, to identify the risk, mitigate it, and then work and go ahead. Thank you.
ICICI Lombard and CNBC TV 18 present India Risk Management Awards Risk Masterclass. ICICI Lombard and CNBC TV 18 present India Risk Management Awards Risk Masterclass.
The topic of the discussion: thriving in the era of stagnation and distress. And of course, our panelists joining in: Sandeep Batra from Pidilite Industries, Sunil Singh from Reliance Industries, Monica Yadav from JSW Group, and Sanjay Datta from ICICI Lombard General Insurance Company. Thank you so much, everyone, for joining in. So let's start with the broad strokes. The old risks are back, whether it's inflation, whether it's capital outflows, whether it's trade wars. So the question is, how do businesses insulate themselves in such an uncertain environment? So maybe we could get your opening perspectives on this from your experience. Sandeep, maybe we'll start with you.
I don't think it is possible for any business to insulate. I think we are not living in a cocoon that you can build a shield around you and not get impacted by what is happening in the rest of the world. So I think what good businesses and what I have seen in the companies that I have worked for, and particularly in Pidilite, is that you do fair amount of scenario planning, and something that we mastered during COVID, because situation was changing on a daily basis. So I think that good practices have prevailed and continued, and you have now fair amount of scenarios that one is geared for. And one of the first things that this scenario planning says is that try and avoid any shocks to the main business. So build enough buffers, build enough dry powder with you, so that sudden shocks don't come and throw the business totally out of gear. Which means you strengthen your balance sheet, make sure that you're not going to get disrupted if tomorrow there is a challenge where you're not able to raise money. So you have enough money in the balance sheet. We saw a huge amount of disruption in the supply chains. At times material was not available. So we have elevated our inventory norms, that kinds of builds a buffer around whatever supply chain related shocks may happen. Because at the end of the day, if there is indeed a slowdown in the economy, nobody is insulated. It's just that you will have as much of a soft landing as you can manage the company for, and if you are strong, you will certainly come out stronger when the situation turns for the positive.
Monica, coming to you, your perspective on this, a company, how does it insulate itself from the risks, especially as I mentioned, the old risks rather coming back. Sandeep has mentioned about the human element. What's your input to this question?
I think what Mr. Batra rightly mentioned is there is nothing as such which would insulate you completely. But yeah, there can be strategies which can be adopted. So one is in terms of diversifying your sources for procurement. Steel being an industry which is heavily dependent on raw material commodities, wherein you have dependence on various sources. So as a company, our focus is to also build in a lot of captive facility, wherein we don't have to have any external dependence.
Always take care of it from an inside perspective. Always have the resources available locally so that you can mitigate any external headwind coming out.
Considering the current scenario of the Russian-Ukraine war, which nobody, I think, expected would continue for more than a year now, this is something which has perhaps led everybody to think in terms of diversifying your sources. Plus, at the same time, also, adding a lot of value-added products, diversifying your product range, which you can then, broaden your markets. So our business would focus on domestic requirements. We also have exports, but yes, the focus is on the domestic markets.
But speaking of sanctions, that's an interesting segue to go to you, Sanjay, because sanctions can cause disruptions in bilateral payment, shipping and transportation, insurance. So there are a lot of factors involved there. So what can organizations do to insulate themselves from the after effects of that? And what are insurers doing to this regard? Your thoughts on this?
We will face issues like sanctions and everything else. I think ability for the Indian insurance market to find solutions to help the Indian corporates is going to be becoming extremely important. I think it's important to develop capacity to be able to help businesses to take risks in these times when they are under geopolitical pressure, or there could be other kinds of pressure. The one thing to remember is each of these areas, and this is the big learning nowadays, whether it's pandemic or something else, or wars, have a lot of domino effect, across areas of risk, be it economics, interest rate, or anything else. And we've learned to understand domino effect of risks and be able to use internal capacity provided by, various players, including, insurers, to be able to manage risks. Because, for us, it's not only about being resilient, but it's also being able to predict and understand domino effect of risks when such kind of big risks occurred, which have huge impact across the world.
Is that going to be the risk mantra for enterprises? Because as you mentioned, there's a domino effect. Sometimes there are foreseen consequences and sometimes there are unforeseen consequences. So in this uncertain, interesting world that we live in, what do you think is going to be the key risk mantra for enterprises? Always be prepared. That's going to be
so that's a constant, that's the price we pay, eternal vigilance on the risk side. Where it's like, they say the aviation world, everybody monitors, near misses. It's not the, crashes. We learn from the crashes. But every day a flight lands safely, there is some risk management which is being done every day on a daily basis. That's how we each one need to, work. We have to have a frameworks. We have to understand the consequences of, risk playing out, whether locally, internally, or things, and find capacity, as I said.
Sunil, you have anything to add to this balancing growth versus risk? How do you go about it?
Basically, as far as the growth is concerned, so long as the government is spending a lot of money on infrastructure, growth will continue. And if you see the tier 2 and tier 3, still they don't have the metros and all those things. So there is a lot of scope where that government spending is going to happen. So growth is going to happen at least for another 25 years as far as the India is concerned, so long as the policies remain constant. So if the policies are constant, I think there will be investors, they will be investing the money here in India because they know that whatever they are going to invest, there will be a lot of return on that. Only challenge what I see here is that if there is a change in the policy from the government side, that is the bigger risk as compared to any other risk which I see. And the area from where I see the growth which may be coming is that medical also may be one area where I think India can emerge. Like just now we see that pharma is there. But lot of scope is there from the hospital point of view, where I think medical tourism, you may be knowing that that was picking up. But because of COVID, I think this has come down. But this is one area where I think it is going to happen. And manufacturing sector, I think we still have a lot of scope, because if you see the four-wheeler, out of I think nearly 6% or 8% of the families, they have that four-wheeler. So manufacturing sector, if the vehicle sale, which I see that is going to happen, and almost all that automobile manufacturers, they can make a lot of money, because still that scope is there, only 8% coverage is there. So that is also going to happen. And somebody, if you see from the EV point of view now, the electric vehicles, that is another area where I think most of the transformation is going to happen. Even the people, they own their own cars, they'll be shifting to electrical vehicles. So that is another area I think where the growth may come.
Absolutely. And EVs are seen as the sort of a sunrise industry, just as we had the tech sector.
Yeah. And second thing is that if you see that solar now, because of the climate change and all those things, so solar will be another area where currently the government is having around 60 gigabyte cover, and that this within a span of maybe, because 2030, you know that 80% of the total power generation will be through solar and renewable energy only. So there is also a lot of scope for India to grow in that sector.
And on that note, we conclude the first panel discussion here on the topic of thriving in the era of stagnation and distress. I'd like to thank all of the panelists for sharing their valuable insights. Thank you so much to the audience.
ICICI Lombard and CNBC TV 18 present India Risk Management Awards Risk Masterclass. ICICI Lombard and CNBC TV 18 present India Risk Management Awards Risk Masterclass.
Panel 2, Building Resilience in Times of Economic Distress. And here to discuss with us Arvindan Raghunathan of TCS, Rajiv Agarwal of KEC Industries, and Sanjay Datta of ICICI Lombard General Insurance. Uncertainty will always be a part of our lives, but the key is, what lessons do we learn from uncertainty? Arvindan, maybe you could take this up first.
What we look at is there are 4 or 5 things which we generally do not necessarily in terms of from a recession perspective, but also day in and day out, right? One is look at new markets, right? Enter into new domains and technology areas, right? If, for example, US is going into recession, look at other geographies. There are other geographies are also there. Look into other areas, right? So, for example, education, right? E-commerce, lot of things are there. Right, and invest in digital capabilities, right, and innovation. There are a lot of new and emerging technologies have come, right? Artificial intelligence, ML, machine learning, analytics. So this, when you invest and also innovate, right, what happens is you provide differentiate capabilities to the customers, which will help us in terms of mitigating these risks, right? And again, look at cost optimization, process efficiencies, adopt the lean technologies, this Muda, Mura, Muri, etc. Right, so that you add value to the business internally and also externally, and also help in terms of without compromising on quality and customer satisfaction. Right. From a perspective, the other one I would say that invest in talent. Right. So this is a time where we have to engage with them, right, retain them. Right, make sure that they stay with us for a very long time, because a domain knowledge, industry knowledge, a lot of knowledge is very important for us to work. And finally, I would say that stay close to the customer.
Rajiv, from your perspective, what lessons do we learn from the past economic downturns, and what do we apply in today's scenario? Your sector's, your infrastructure's perspective on this.
You have to understand the risk better. You have to assess the risk better and understand it properly, because there are a number of examples where a lot of power plants were bid out for 25 years at a very, very low prices, 2 rupees, 2.5 rupees. Nobody actually that time thought about that coal prices can go up to $100, $150 also. So whatever price they were bidding at that period of time, that was not even covering the fuel prices few years later. And that led to the significant default. Okay. You have to look at the diversification in the entire value chain. So these are the two, let's say, learning. One is a risk assessment has to be holistic, has to be proper in every decision making that you are taking. Second, you have to diversify your entire value proposition, entire business value proposition, be it the supply chain, be it your product that you are targeting to any particular country. If your exports are destined for these two jurisdictions, if you have not diversified enough, then probably you are going to take a hit, right?
Absolutely. And these days, I think contagion is a more scarier word than recession. Sanjay, any initial thoughts on any initial response on
I
what?
agree to both of them. Look at risk. There is pure risk and there is speculative risk. And we tend to think of them as separate. Insurers don't like speculative risk. We don't get into speculative risk. We want to insure pure risk. Now, there's a lot of financial risk which straddles both. Correct. And we'll have to learn to be able to help, give solutions for, all of that. And that's where it's important to understand the nature of the risk and what we're trying to address, and just look at, what I call it, we talk of balance sheet risk, we talk about our own P&L risk, but, what is my capacity? And capacity is an important word to understand. I'll tell you with the context of, there are two reasons. First reason is that capacity comes from, let's look at global capital. And it's a very important thing we learned in insurance. So let's say you have big events, happening, which are big, kind of shocks, or traditional risks, hurricanes and all of that. Suddenly, rates harden. For the next year, after the hurricane, rates harden, capital flows there. Because the return on the capital is much better there. So you have problems with the guy who didn't have a thing. So you have to understand, connect it with the financial risk. It's not something which you're just only preparing for the physical part. You have to also look at how capital flows looking for returns and how it seeks these kind of things. And he's talking in the context of all of these financial events which are occurring. So you have to just link it. And the other thing is, the people issues, the risk and people issue. And it's very important for companies to adapt to that in terms of, economic risk, pure risk. And we have examples, of, for example, engineering companies are now being led by finance people. Because they understand when they're quoting and all that, long-term speculative risk better, currency risk and all of that better. So it's not the engineering thing will get done, but you need to understand how you kind of predict the business going forward. Business, the need for capital. Where will I get capital? Where will I get solutions? So this is the play which is very, very important, and that's what is important at this point of time. You have to play the game. But recognize the whole, the risks are the same. You can't innovate on risk. You can't make an earthquake go away. You have to understand all of that. But you have to play the game differently, using the way the people mindset changes is very important.
On that note, we'll conclude this panel discussion. I'd like to thank all of our panelists for sharing their wonderful insights on the topic. Thank you so much.
ICICI Lombard and CNBC TV 18 present India Risk Management Awards Risk Masterclass.